Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Excuse me. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Give me just a moment. I need to adjust my screen resolution. Note that I am streaming at 1080p on YouTube. I had to adjust my settings. I'm watching YouTube on another computer so I can see the chat there. So just a reminder again, I am watching, you can stream, I am streaming on YouTube at 1080p. So if you have any issues with your resolution, just click the gear icon and you can change to 1080p. All right, risk disclosures out of the way. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my channel and the topics of my presentation that I'll go through in just a moment. And note the Bookmap Discord is free and available to everyone. There's a lot of great content there on a variety of topics, stocks, futures, a variety of languages, and a lot of traders, active traders that are ready and willing to help other traders, all trying to grow and become better traders in a very active community. So Bookmap Discord free and available to everyone. Everyone is welcome. Please feel free to join us. I'm also on X, formerly known as Twitter. My name there is at Doug Pless. The focus of my presentation today and the focus of the Options-Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset. For example, the SP 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. So again, I'm focusing on an underlying asset. Setups in that asset can be taken any number of ways. Also, the setups that I talk about today, I'm generally focusing on intraday trading, but they can also be suitable for a longer time frame, either swing trades or even longer time frame trades. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. So here's my agenda for today, Friday, January 12th. First of all, I want to go over news items, economic data, and events for today, preview of next week, and then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with economic data. So today the big data release was the PPI data out at 8:30 a.m. Eastern Time, and that there's a month over month, year over year, month over month, lower than expected, lower than the previous number, and then year over year, also lower than expected, but slightly higher than previous number. And here's the market reaction to that data. 8:30 a.m. Eastern Time, very bullish reaction, follow through after the cash open. All right, so this is the ES futures and Bookmap. I'll talk more about this in a few minutes. So very bullish reaction to the PPI data. So that wraps up the data for the week. It was a pretty light week with CPI yesterday, PPI today. Next week, note that Monday is a market holiday, and I will not be streaming on Monday. Also, I will be out on Tuesday, so I'll be back on Wednesday, and then we can wrap up the week with the January options expiration, and this could be an interesting expiration. So be sure and stay tuned for that. All right, so again, I will be out Monday and Tuesday next week. I will be back on Wednesday. All right, so let's start with positional analysis now. And this is the S&P 500 futures in Bookmap, the ES futures. Before I take a closer look at this chart, I do want to start with the larger time frame, and we'll go back to the underlying index for the ES futures, and that is SPX. And I want to start with the uptrend that began October 30th, and the trend continued higher for a variety of reasons. IV collapse, put Vanna Rally, dovish FOMC, inflation reports coming in better than expected. And then the S&P 500 SPX has definitely had trouble getting above 4,800. All right, now let's go to another SPX chart. Take a look at a little bit shorter time frame. And this is the 30-day 1-hour chart, showing price action again for the last 30 days 1-hour chart. Here is the 4,800 level. And then the end of last year, the last week of December, SPX moved up toward 4,800 and could not get above. Tested it yesterday, and then tested it again today, and was soundly heading lower. All right, let me point out levels on this chart. First of all, the weekly expected move, that's shown by the dashed purple lines. So that's the lower weekly expected move, and the upper weekly expected move is right here. This may be difficult to see. There are kind of a cluster of lines there. So that is the weekly expected move based on the options market. SPX trading above the upper weekly expected move, and that information is updated once a week. I update that over the weekend. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market. That's updated once a day, and SPX is trading right in the middle of that range between the lower and upper daily expected move. And note that expected move for today was right around just a little bit less than plus or minus 26 points. Yesterday it was plus or minus 32 points, and the day before plus or minus 21. So the increase yesterday was due to the CPI report, and then the increase today was also due to the PPI report. All right, so right now SPX trading above the weekly expected move and inside the range between the lower and upper daily expected move. All right, the dark red lines are showing Spotgamma levels. These are proprietary Spotgamma levels provided to Spotgamma subscribers, shown on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. So what Spotgamma does, they take the open interest data that's provided by OCC, they apply their own proprietary algorithms to come up with these levels. So again, I'm going to go over the key daily levels. First of all, there's the put wall at 4,600. That's a strike with the largest net negative gamma that can be expected to act as support. And the next level up is the volatility trigger at 47.65, and that is Spotgamma's proprietary gamma volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility when market makers are trading in the direction of price. On the other hand, above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And then finally, the call wall is up at 4,800. That's the big resistance level that I just spoke about. So that's the strike where the largest net positive gamma can be expected to act as resistance, and that is also the absolute gamma strike. That's the strike where the largest absolute positive and negative gamma, and as price approaches that level and expiration approaches, that gamma should increase. I'll talk more about that in a few minutes. So the potential ceiling at 4,600, potential floor at 4,600, the put wall, potential ceiling at 4,800, the call wall. Note there was only one minor shift in levels for the S&P 500 for the SPX. The volatility trigger did shift slightly higher from 47.45 yesterday to 47.65. All right, let's take a look at one other SPX chart. And again, jumping down in time frame, this time to a 1-minute chart, just so we can get a closer look at the levels in play for today. So this is SPX showing about a day and a half of data, maybe a little, almost 2 days worth of data. So this is the reversal yesterday that began right around noon. Somewhat of a continuation today up into the call wall here. There's a combo level below that, and then the call wall acting as resistance. I'll talk more about that when we get to And sorry, can you hear me now? All right, can somebody tell me how long sound was out? WRB says 3 minutes. All right, so I'm going to go over. Sorry, I must have accidentally pressed the mute button on my microphone. All right, so I'm going to go over the ES chart again. All right, so let me clean this up. All right, so this is the ES futures and Bookmap. We've taken a look at the underlying index. Sorry about that. So I'm going to take a look at the underlying. So I've taken a look at SPX, the underlying index. Now I'm going to take a look at ES. So in ES, I have my own cloud notes, the C levels column. So I can show a variety of levels all in one column. First of all, I have SPX levels. There's the SPX 4800 level. That's the call wall that acted as resistance. This 47.99 C1 level, that's a combo 1 level, just below that. Combining SPX and SPY, gamma weighted open interest into one level, converted to an equivalent SPX price. And note that level was resistance today. And then other levels in play for today. 476, this is a SPY level, SPY 476, acting as support for a pullback for a long entry before the cash open as a follow through to the bullish reaction to the PPI data right here. Bullish reaction, pullback to 476, launching point for a long up to the 4800 call wall. Also, I have another SPX level here. That's the 47.65 volatility trigger acting as support before the cash open. All right, so those are the levels in play for today. I'll talk about setups in a few minutes. And just want to point out, this sound, just angry rejection at 4800. This was kind of amazing. At this time, I had the Market Pulse tool on, which does make sound, so I've turned it off now. And this was just angry. I'll talk about this setup more in a few minutes. And note at this zoom level, huge, there were just huge iceberg orders, sell orders. That is, in this zoom level, looks like 42 executions for a total number of contracts, 7,468. That's huge. And that's also shown here by this falling light blue line, iceberg orders selling as ES moved up toward that 4800 level. And it was just like, you shall not pass. Just a very angry rejection at 4800, and set up a great short there. And you've taken short ES futures. I think WRB bought a put. So any number of ways to take that short. Just again, a very angry rejection at 4800, and really kind of setting the tone for the rest of the day. And note today, this is showing icebergs. This is cumulative for the day, for the session. Icebergs negative, stops negative, and CVD all negative, very bearish. And that was after this rejection at 4800. All right, so those are levels in play for the S&P 500. Let's take a look at NASDAQ now. This is the NQ futures and Bookmap. And before I take a closer look at this chart, I want to take a look at, first of all, QQQ. This is a 1 minute chart showing in gray over here the before the cash open extended hours, and then the dark portion the regular trading hours. Note that 407, this L4 level, acted as support before the cash open, and then after the cash open, or I guess just before, that call wall acted as support, and then after the cash open also 411 acting as resistance, 410 resistance. So after the this rally that began right around 645, the NASDAQ is traded in a pretty narrow range. All right, so those are the QQQ levels in play for today. Call wall, absolute gamma strike at 409. And note that is the absolute gamma strike and call wall again. And the call wall shifted lower from 415, and the absolute gamma strike shifted higher to 404, so that both the call wall and absolute gamma strike are at 409. We'll take a look at the absolute gamma strikes and closer in just a minute. All right, so those are the levels in play for QQQ. And let's go to NDX, take a quick look. And here this L4 level at 16,850, and then this combo L3 level just above that, acting as resistance earlier today. All right, let's go back to Bookmap. So in Bookmap, again, I have my own cloud notes. So I can show NQ levels. So there's the NQ 1750, 17,000. I'm showing the zeros in the 50s. Also NDX levels. There's that combo level and the LG4 level, large gamma 4, and there's the SPY the QQQ 411 level acting as resistance for the NASDAQ in that reversal lower. And then there's the 409 absolute gamma strike call wall. All right, so those are the levels in play for today for NASDAQ. Acting as resistance. And we'll talk about setups in just a few minutes. All right, so let's take a look now at gamma notional so we can wrap up the positional analysis. I like to look at this every day. This is showing how market makers were positioned on the gamma curve at the beginning of the day for SPX, SPY, NDX, QQQ, RUT, and IWM. So the S&P 500, NASDAQ, Russell 2000. So this gives me a sense of the expected volatility and trading range for the day. So note these numbers, with the exception of the Russell 2000, are positive. So positive for SPX and SPY. So what Spotgamma assumes is for an index like the S&P 500, traders are short calls, market makers long calls in a positive gamma environment. Market makers are long calls, hence positive gamma, and they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility, leading to smaller trading ranges, more mean reverting price action, and not so much a trend day, more of a range day. All right, these numbers did shift from yesterday. So the gamma notional, although still positive, did shift lower for SPX, SPY, and NDX. Actually shifted higher for QQQ, and then shifted lower to negative for Russell 2000. All right, so overall today in this, for the S&P 500 and NASDAQ, I'm in a positive gamma environment. I'm typically looking for lower trading range, more mean reverting price action. All right, the next thing I want to look at to wrap up positional analysis is these absolute gamma strikes, just so we can focus on where the gamma weighted open interest is concentrated. This is for SPX. I'm going to zoom in on this chart a little bit, and I've talked about this several times this week. What this chart is showing is gamma for SPX at different strikes. So gamma is shown by the orange bars, that's call gamma or positive gamma. Blue bar is showing negative gamma or put gamma. And this is the 4800 strike. And you can see the amount of gamma weighted open interest concentrated at that level. So that level is has been changing somewhat from day to day, but today it is definitely the absolute gamma strike, the strike with the largest absolute positive and negative gamma. And as expiration approaches next week on Friday, January 19th, and price approaches that level, that gamma will increase, and this strike will become more and more important if price stays up toward that level and as expiration approaches, and could act as a magnet for price. And as we saw today, it definitely acted as a resistance level. All right, so that is the SPX. Let's take a look at SPY. Zoom in on this chart just a bit. This is the 475 strike. So really the thing to note here is the concentration of call gamma between 475 and 480, and put gamma below 475. And then finally, let's take a look at QQQ. Remember 409. .409 is the call wall and absolute gamma strike. And there it is right there, the 409. That's where most of the gamma weighted open interest is concentrated. So there are your key levels and key zones for SPX, SPY, and QQQ. All right, let's get to some setups now. So the first thing that I want to do is take a look and see what options traders have been doing today. I'm going to start with the S&P 500, and this is the hero chart. So everything that we've looked at so far, other than Bookmap, has been based on static data. Open interest that's updated once a day, sometime during the night. Spotgamma takes that data, applies their own proprietary algorithms to that data, and comes up with the information that we've just looked at, the levels, absolute gamma levels, key daily levels, and so that's the information that I use in my planning process. Now we're going to go to the execution process, And I'm going to start and see what options traders have been doing today. So again, this is the hero signal in Spotgamma. HERO stands for Hedging Impact Real-Time Options. So now we're going to take a look at real-time data. This chart is showing price for SPX and the HERO signal. Again, Hedging Impact Real-Time Options, and it's showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all combined into one signal. All right, let's take a look. Let's take a closer look at this chart. And right now, I'm just looking at the hero signal for the regular trading hours. I am going to turn on extended hours here just to show the setup that I talked about that was before the cash open. So this is the reaction in the options market at 8:30 a.m. Eastern Time after the data. Note that SPX and ES options do trade before the cash open at 9:30. So that's what this is showing. Note that flow alert just after the move higher at 8:30. Here's the pullback. Notice traders were taking positive delta positions, so a rising purple line indicates that traders are buying calls and or selling puts. And when traders take positive delta positions, market makers take the opposite side, and they have to buy futures to hedge their delta exposure. So whenever traders buy and sell puts and calls in SPX, ES, SPY, market makers are taking the opposite side of that, and they hedge their delta exposure with ES futures. All right, so this is the helping to set up this long in the morning that I talked about. So let's take a look at that first. So let's go back to ES now. Go over to ES. All right, here's the reaction. Actually, I'm going to zoom in on this more. Sorry about all this zooming. All right, so this is what it looked like at that time. Note that here's the reaction to the 8:30 data, very bullish, and then a pullback to 476, and there was some liquidity just below that level. That's showing a history of the limit orders in the order book. Below price, those are limit buy orders. Also note that all the lines in the subchart were increasing. So this is showing, these numbers are pretty small, but large traders buying with iceberg orders. That's the light blue line. The pink line, magenta line, is cumulative volume delta. That was rising. And also the yellow line showing buy stop orders, all moving higher, helping to set up a long. So here the big picture was setting up a long. Bullish reaction to the data, pullback to a level that you expect to act as support, and it does. All right, now I'm going to zoom back out, and this actually leads to a pretty large move after the cash open, or actually mostly before the cash open. All right, so again, pull back to a level that you expect to act as support. It does, and then a pretty sharp reaction before the cash open, and then the next setup was the short, just right around 9:45. All right, so let's go back to Hero now. All right, now in this case, I'm going to turn off the extended trading hours so we can just focus on regular trading hours. So now this begins at 9:30 a.m. Eastern Time. All right, so here's the call wall. That's also the absolute gamma strike for SPX. And notice price reaches up to that level. Initially, traders were taking positive delta positions. That's shown by the rising hero signal, and then that reverses sharply lower as traders start fading that. They start taking negative delta positions at that level of resistance. And that gave you just a little bit of a lead here. Note that hero starts to drop lower. And about 5 minutes later, price moves lower, giving you a good leading indicator for a short. Of course, again, that is going to be, that is a potential resistance level at the call wall. All right, let's go back to ES now. Let's zoom in on this. All right, so we know that traders started taking negative delta positions. Also note, as price moved up to that level, large traders, I pointed this out before, were aggressively selling this with iceberg orders they used to hide their size. So now that I've zoomed into this area a little bit, these iceberg orders are separated out a little bit. That's 350 sell icebergs and 2 executions. That's 2,390, 15 executions, and 4,282 and 22 executions, shown by the on-chart indicators as well as the sub-chart indicator. So we know that aggressive buyers were moving price up to this level. Also options traders, we know that about 5 minutes before this final test of the call wall, traders started taking negative delta positions. We already know that traders were selling this with iceberg orders. And then the last clue, the volume dots here in Bookmap. Volume dots are showing market buy minus sell. Green dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So there were, I guess, a lot of clues here. Confirmations for a short. Again, hero signal shifting lower, traders shifting from positive delta to negative delta positions. Market makers take the opposite side. They have to start selling futures. And then large traders also fading this move with iceberg orders in pretty substantial size. And then aggressive sellers start to come in. And this last test of 4,800 was a great entry point for a short. And as price starts to move lower, You can just see all the magenta volume dots. Secondary entry point at 478. And as price starts moving lower, more and more magenta volume dots shown by falling cumulative delta, and then sell stop orders start to fire off. That's shown by the on-chart indicator there, and also the falling yellow line in the subchart. So long setup, extended trading hour, long setup before the cash open, and then just right after the cash open, great short in the in ES futures or any form of S&P 500. Again, the WRB said he bought a put, great, or he or she bought a put. Way to go. All right, let's take a look at NASDAQ now. Very similar setup. And let's take a look at Hero, see what options traders were doing in NASDAQ. So just like the S&P 500, this is a combined signal for NDX and QQQ. I'm going to zoom in on the morning here. And note, just starting around 9:45 to 9:55, Hero started making a series of lower highs, then moved sharply lower just before 9:55, and then just a couple of minutes later, NASDAQ reversed lower. So a little bit of a leading indicator there in the NASDAQ Hero signal as well. Let's go to Bookmap. Let's go to NASDAQ. Zoom in a bit. All right, for NASDAQ, we know that traders started taking negative delta positions about 3 to 5 minutes before this final test of 411. And note that large traders were fading this move with iceberg orders as well. That's shown by the falling light blue line, although not nearly in the size of ES. Volume dot showing aggressive sellers start to come in, shown by that large magenta volume dot there. And then aggressive sellers start to come in and take price sharply lower down to from 411 down to 409. And as price starts moving lower, that was fueled by sell stop orders and then also aggressive sellers. And note at this point right at 10 o'clock, cumulative volume delta shifts from positive shown by the dark blue line to negative shown by the magenta line there. All right, let's go back to Hero and take a look at one other signal. Also for the NASDAQ especially, I like to take a look at this MAG 7 signal. And let me show you what this is. This is another combined signal. In this case, combining options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven. That's Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. All right, we'll zoom back in. All right, so in this case, the MAG 7 indicator was a little bit late. Both the S&P 500 and NASDAQ signals acted as leading indicators. This was lagging a little bit, but it is a good confirmation. And finally broke lower just right at 10 a.m. and really price was already moving lower. Let's go back to NASDAQ. All right, let's take a look at some stocks now. And also, if anybody has any stocks they want me to take a look at, please let me know and I'll be glad to do that. I've got several I want to highlight. First of all, AMD. So back in. And AMD short setup this morning. And this is the total signal. I'm going to separate out puts and calls now. And this is showing that traders, the blue line showing puts, traders not doing much with puts. And just before 10 a.m., they started selling calls. That's shown by the falling orange line. So the blue line showing not much with puts, orange line showing right before 10 a.m. traders started selling calls. When traders sell calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. And traders continued to sell calls overall. And note they shifted starting to buy calls right around 11. All right, let's go take a look at AMD in Bookmap. And this is, by the way, this is a fairly typical pattern. In this case, a bullish pattern for the morning, traders taking negative delta positions, and they finally reverse and price consolidates. Not the best example. All right, so let's go to Bookmap. Go to AMD. All right, so AMD breaks lower just right around 10 a.m., right at 148, as traders start taking negative delta positions, primarily selling calls, and a sharp break lower. Note the magenta volume dots coming in as aggressive sellers were selling AMD as it broke below 148 and VWAP shown by the light blue line there. And that was good for about a 3-point move lower in AMD. Notice the liquidity here at 145 that comes in at the cash open. This is pretty typical. Below price, those are limit buy orders. The heat map is showing a history of the limit buy orders in Bookmap, and those large limit orders can act as a magnet for price. And then AMD reverses right at that 145 level. All right, let's see, the next is Meta. So a bullish day here in Meta. Note for Meta, 370 is the key gamma strike. Launching point for a long. And 375 is the call wall. All right, let's go take a look at Hero and see what options traders were doing. Let's go to Meta. Here's the 370 key gamma strike. 375 call wall, initially acting as resistance. Now price trading up and down around that level. All right, let's separate out puts and calls. So initially in the morning, traders were buying calls. Let's zoom in on this just a little bit. So initially in the morning, traders were buying calls. Note the timely flow alert. Traders buying calls. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. They start selling calls, and note that price, although still rising, does not rise at the same rate after traders started selling calls and not as aggressively buying calls. All right, that's meta. Go back to, oops, total. All right, let's go to Bookmap. And there's that sharp move higher up to the 375 call wall. Note in this case there were some limit sell orders in the order book before the cash open. More came in at the cash open. Price moves up to that level, finds resistance, and then finds support at VWAP, moves up, and now is trading right around that 375 level. All right, the next I want to take a look at is Tesla. All right, Tesla, good for a quick long in the morning. Note that 220 is the put wall, and 225 is the hedge wall. Let me squeeze this in just a little bit so we can see 225. So 220 put wall acting as support for a move higher at the cash open, and 225 hedge wall acting as resistance. Let's see what options traders are doing. So there's with Tesla, this is pretty typical, a very strong correlation between options trades, hedging flow, and price action. Zoom in just a bit. Launching port for long at the put wall as traders were taking positive delta positions. Price moves up to the hedge wall. Note the timely flow alert for a mean reverting trade. And then options traders started taking negative delta positions, and Tesla moves lower. All right, let's go back to the S&P 500 now. And first of all, I've got a couple things to wrap up here. So Gray wanted to take a look at zero TTE flow from yesterday, so we can do that. So this is for today. With the hero signal here, I can take a look at up to 5 previous days. So I'm going to go back to yesterday, the 11th. That's starting at 11th, and then let's make the end date the 11th also. So this is from yesterday, regular trading hours, and then Gray wants to see the zero TTE flow. So I'm going to turn on next expiry, and this would be for the S&P 500. This would be options that expire at the end of the day yesterday. So the S&P 500, SPY, SPX, ES all have options that expire every trading day. All right, so 0 DTE is showing, and that's the green line, teal line, showing options that expired yesterday, and the purple line is showing all trades, all expirations. And note at the end of the day, there was a very strong correlation between the 0 TTE trades and the all expirations, indicating that 0 TTE trades made up a very large component, a large proportion of all the options trades yesterday. I'm looking at the notional value over here on the right. 1.27 billion versus 1.59 billion. All right, let's turn that off and let's go back to today. All right, there's today. Let's go back to Bookmap. All right, one thing I want to mention before I wrap up is kind of the way I'm approaching my teaching here. And my approach is looking at the big picture. So one thing I learned from an experienced trader is he always said, get the big picture right, and everything else tends to fall into place. So that's why I'm focusing on this larger time frame, zooming out, looking at the big picture, trying to get that right, seeing what options traders are doing, large traders with iceberg orders, smaller traders with stop orders, all traders with cumulative volume delta in a bigger picture, larger time frame. So you know that Bookmap has a variety of daily streams every day. Monday, Tuesday, and Friday. Bruce streams at 10 a.m. He's more focused on a smaller picture. He's looking at smaller time frame, and he talks about entries and exits on a smaller time frame, and you can fit that in with what I'm talking about in a bigger picture, larger time frame, how to set up your trading day, how to approach your trading day, and really after this reversal just before 10 a.m., the bigger picture really shifted bearish. You can just see in the subchart here, looking at all these items in the subchart again, iceberg, stop, CVD, all negative. No reason to look for a long. And even now, the order flow here is showing somewhat negative. It looks like cumulative volume delta is starting to shift higher, maybe starting around 130. Now, of course, hero signal options traders, that is shifting higher and started shifting higher about 11:45. Traders taking positive delta positions. So when I'm looking for trades, I'm kind of weighing all this information, looking at the big picture, deciding which direction I want to trade, what's my directional bias, and that may change during the day. It was pretty much neutral to begin the day, given the minor shifts in levels. So as I mentioned before, SPX, the volatility trigger shifted slightly higher. For SPY, volatility trigger shifted lower. Also for SPY, the put wall shifted slightly higher. So, but the call wall and absolute gamma strikes for SPX and SPY did not change. So pretty much a neutral outlook for the S&P 500 as far as the shifts in levels go. And then, again, looking at that sound reaction, just the angry reversal at 4,800 indicated at least for the next couple of hours, just to look for shorts. All right, so that's my approach, looking at larger time frame, bigger picture, trying to frame your trades. Again, the idea is to get the big picture right, and everything else tends to fall into place. And one other thing, want to note that Bruce has talked about a setup checklist, and I'm going to put together, I don't have time to do it this weekend, but I'm going to put together a trading checklist, just a very brief list of things that I'm looking at from Bookmap and Spotgamma to make my trading decisions. So I'll try and get that done in the next couple of weeks, and I'll post that in Discord. And one last question, or one question, is Abu asks, what does the yellow alert mean for Tesla? That's a hero flow alert indicating significant options activity. And there are different ways to interpret that. So Abu, it is not necessarily a big order of options, it's just significant options activity. All right, my time is up. I'm going to wrap it up. Remember, next week I am out Monday and Tuesday. I will be back on Wednesday. And everyone have a great weekend. And I will see you next Wednesday. All right, thanks everyone. Bye.